Hello, everyone. Joshua Hayes at BigWaveTrading.com. Not much has changed this week from the previous week. It's like we did it all over again. We gapped down here due to DeepSeek news, rallied in the week, and had a weak Friday session, which led to another gap down based on tariff news. We rallied into it and then had another reversal on today's Friday session. So the chop continues. As long as we are in between these highs and these lows, we are range bound. So another thing that can help you from getting extremely long this market is this indicator. Price should not be above the 50 SMA if this indicator is below the zero line. If it is, it isn't properly aligned. The best things happen, and we're just using this short term, when this indicator, tickets indicator, is above the zero line and price is above the 50 SMA. That is when the quote, quote, easy money comes. We are not in an easy dollar environment right now. The time segment volume indicator looks good, but the tickets indicator is below the zero line. So price is always king. And based on what I'm seeing, we are in a big consolidation zone. I have made mention that I am bullish intermediate to long term, but short term, there remains too many small issues out there, like my leading ETFs right now are energy, healthcare, real estate, consumer staples, technology, and consumer discretionary are some of my laggards. So until that changes, I have to remain cautious. I also have a VIX that continuously makes higher lows since December. Each time it makes a low and then moves off that low, higher lows. The 1 year put call ratio is at levels where we see the market pull back. We're in the middle of bearish seasonality, February, and it really kicks into the second half of February. That all of these things combined makes me short-term concerned, and I do expect a 10% correction. However, if you don't understand the regime we are in, the algorithm controlled market that we're in, and don't realize that we can just easily just burst out and hit new highs before we ever see that 10% correction, you don't understand that market. But I like to keep it very simple. Price is all that matters. It is king. It is the only thing that affects my profit and loss statement. It is the only thing that affects your profit and loss statement. But we can take a look. And besides that, I forgot to mention, I have these not only do I have these negative divergences in these two indicators that you're looking at, but all of my trend and momentum indicators, no matter what I use, no matter what I look at, PPO, MACD, TSV, stochastics, it doesn't matter what it is, I have negative divergences across the board. So all this is why I still expect us to pull back, but I don't expect anything major. I don't expect a cyclical or, God forbid, a secular bear market. I only expect secular bear markets whenever we have a rising interest rate environment, and I only expect cyclical bear markets when we have rising interest rate environment. As long as we don't start hiking rates again, I'm just looking for a 10% pullback. Nothing more, nothing less. But right now, look at the QQQ. Tickets indicators below the zero line. Prices in a range. DIA, similar situation. IWM, similar situation. So because we have, and the 50 SMA is rolling over, by the way, on the IWM, so I don't like seeing that. But because of everything that I just mentioned, I did something that I never do for my quarterly portfolios. I buy 10 stocks, 10% of my account capital in each. I hold them for 90 days, and I reconstitute every 90 days. The reconstitution period is near the end of February, but I made a decision this past Monday, actually on the weekend off the tariff news, based on everything that I was just discussing, put call, VIX, leadership, everything being extended that I do like. Actually, I got one stock that isn't right now in my squeeze scan. Due to everything that I mentioned, I went ahead and sold all the quarterly portfolio positions early. Now, why did I do that? I'm really quickly running through them all. You can see all of the tickers up here and all of the names in there. But why did I do that? Because a very rare feat was happening this quarter. Reports, daily watch list trackings, there we go. At the end of this Friday session, the quarterly portfolio is up 24%. 9 winners, 1 loser, up 24%. The S&P 500 is up 2%. That is a 12x outperformance. On Monday, when I locked everything in, we had a 10x outperformance. That is an outlier, an anomaly, and very hard to duplicate. And this is why I picked 10 stocks, 10% capital in each. If you would have put a gun to my head and asked me, what's the one stock I would hold if I had to pick just one stock, it'd be one of my forever holds, NVIDIA. I would have selected NVIDIA as the one. It's down 7% this quarter versus the SPY's 2% return. But all of the quarterly portfolio names up 24% versus 2%. Now, PLTR is also one of my forever holds. I only have 5 stocks in my forever hold list. 2 of them made the quarterly portfolio this quarter. 1 led, 1 was the laggard. Go figure. But I sold everything off on Monday because of the negative divergences, the call ratio, the VIX, the leaders all being extended, the leadership in the sector ETFs the past 8 days being completely flipped. I should be seeing discretionary technology leading. I'm seeing energy, healthcare, consumer staples, and real estate XLRE leading. So this is why I sold those quarterly portfolios. Now, I am expecting this market to move higher, but if it doesn't move higher, and if we start moving lower here, I won't be surprised. Which then also takes us to our one and only new swing position trade this weekend. UVIX. It's the only signal I got today. I didn't get any new long signals. There are stocks that are interest of me, like EXPE is an earnings winner. I would love to see this consolidate and get long above the high of the day. Very bullish on this sector. Look at MAR, look at HLT, EXPE, look at Zillow. Even though I kind of like lump them all in one basket. I don't know why I throw Zillow up there. But EXPE, Make My Trip, how's that one doing? That's still holding up, even though it's India-based. But the bottom line is, these stocks, travel-related, look good. How does Airbnb look? Whatever. It's dead. But I like EXPE. I like Marriott. And then there's other names that were earnings winners today. CNO, look at that relative strength line. VCTR. But none of these are in actionable positions. And BYRN, this one was just recently in my tight squeeze scan. This is what I'm watching closely. I would love to see this thing consolidate out. Like to see the trading range tighten up and that 50 SMA get close. I'll put a buy stop above the recent highs. I really like BYRN. But none of these are signals. UVIX is a signal. Engulfing bullish candle, candle over candle, heavier above average volume with a pocket pivot point signal, and it's already had max green bop the past 5 days, so I don't need a bop surge. Recent reverse split. This is a clearly defined trade. This is a hedge. It will either work, won't work, or go nowhere, and I'll leave for break even. I don't treat this trade any different than I treated the previous, God knows how many trades I've made previously in my life, and the next 1 million trades I'm going to make in my life. I'm going to risk 1% of my account capital initially from the buy stop, which will be above 29.96, to the 52-week low, which is 27, so 26.99. I'll take 29.97 minus 26.99, get that total, divide that into 1% of my account capital, and that will be my size. If the market gaps down and this gaps up, no trade until it trades back down below 29.96. Once it does, then the buy stop will be initiated. If the market gaps up on Monday and this gaps down, perfect. The buy stop is good. But I want to remind everybody, these signals are only to be purchased on the way up and through my buy stop. If it's gapping up on a catalyst event, you can use a 1% limit offset to get long. But if the stock or signal or trade idea is gapping up just because, it's not a new long signal until it dips below my buy stop level of 29.97, and then I'm not willing on this one to pay more than $30. So 29.97 will be my buy stop. $30 will be my limit offset to that buy stop, and I'm only going to get long if it gaps down. If it gaps up, trade is paused till I get the alert that it's back below 29.97. All right, everybody, I think I want to show you one more thing. My tight squeeze scan. There's only, so NAK, I only have 3 stocks in it right now. NAK does not qualify. This is too choppy. Way, look at that price, 74 cents. I don't think so. LPTH, I love this consolidation, but I'm not interested in it until it at least gets to above this. I guess you can barely see it on this chart, but this is a trailing ATR stop. It needs to be above that ATR stop minimum before I look at it. UAL is the only option on a weekly time frame. You can see triple green. On a daily time frame, we have the tight squeeze. We're near the 21 EMA and 50 SMA, but without being on the 21 EMA, it's not a new long signal until it dips below, reclaims the 21. If you want to use a buy stop, I would put that buy stop above this high, not above this candle high. But UAL is the only one on my watch list for a new long position, potentially with a buy stop. But I need to see it get down to the 21 EMA with it still being in a tight squeeze, or else I'm not taking it, not in a range bound market. All right, everyone, let me know what you think of the market in the comment section. And I haven't had a lot of comments on my video lessons lately. I'd really appreciate some banter back and forth with the YouTube community. Have a wonderful rest of your weekend, everyone. I'll see all the members in the chat room throughout the weekend and on Monday.